This is Peter Eliades with you. This special stock market cycles update going online around 7:30 a.m. Well, not going online, being recorded around 7:30 a.m. on February 13th. I like to acknowledge other people's talents in this business, and there's a trend line that's been pointed out by another analyst. I'll give you the name and the location in a second, but this is really a great trend line, and I want to show it to you because of its potential importance, at least for the short term. Those of you that are technicians, I know will try to repeat this, and you will be able to duplicate it on your charts. You go to two of the most important turns in terms of emotions and drama, psychology of the market that we've seen in the last 10 or 15 years. This is a trend line that's beginning at the exact low in March of 2009. That's anchor number one. I speak of trend lines in terms of anchors. So you anchor it, and you have to make sure you snap exactly to that low. And then from there, you go forward, and your second anchor is on probably not a greatly important high, but a very emotional high after a huge blow-off in 2017 coming into January of 18. So your second anchor is January of 18 high. And let's go forward from here so you can see it on the daily chart. Just follow that line forward. Oh, whoop! Look at that. That's yesterday. You want me to zoom in on that for you? I will. I know you'd like me to do that. This is yesterday right here. Okay? The high for the day yesterday, 33.8147. The line was at 33.79, within 2 S&P points. Got above it. So let me show it to you on a weekly chart so you can get a better perspective of it. There is the line on a weekly chart. I'll move it forward here so you can hopefully see the whole thing. Is that a fabulous line? Look at that. Here's the low in 2010. Comes down to that. Breaks below that line, rallies up to it here, rallies up to it all the way in 14 and 15 with almost an exact hit in this time period right here. Then we go down below it and have this huge rally up into January of 18, have the big decline, and then this huge rally coming into it yesterday virtually exactly. By the way, this blue line, a lot of people look at 200-day moving averages on a daily chart. This is a 200-day moving average on a weekly chart. I shouldn't say 200-day. It's a 200-week moving average on a weekly chart. And look at it. December of 18 low came down exactly to it. A couple of other important turns. I mean, you can go all the way back to 87. The crash in 87 came virtually exactly down to it. The 1990 bottom virtually exactly down to it. Okay, so who is this person that we got this trend line from? His name is Ian Thidjum, and Ian does a blog spot called the Time and Cycles blog spot. So you can go to his chart. I think mine's a little clearer, but timeandcyclesblogspot.com. Ian Thidjum, Thijm, talented analyst, good cycle analyst, and he's the one that came up with that trend line. He also spoke about a 282 trading day cycle that he thinks was inverted yesterday at the top and calls this a potentially important top. I'm not quite ready to call this an important top yet because of the daily advanced decline line confirming, and we still have, as I told you, higher projections on the New York Composite. But I wanted to show you this chart. I hope you enjoyed it.